Well, Spencer Welch is Vice President for Oil Markets at S&P Global. Thank you very much for joining us, Spencer. So, a 17% fall in oil prices then in the past quarter. What is going on in the global oil market?
Hi, good to speak to you. I guess there's two key factors that are taking place. One is oil fundamentals and the situation that we're in. And essentially the market has been in since 2014 is we are in an oversupply situation. So there is more oil available to be supplied to the market than the world needs. The other factor is what is going on in the Middle East, the geopolitics and the concern about escalation and about a potential war and how that might affect supply.
Yeah, I was going to talk to you about the Middle East. There were fears, weren't there, within the industry that could impact supply and perhaps demand. So how big an impact are those conflicts having then, Gaza, Israel, and then also Lebanon, of course?
Well, so if we look at the trend in oil prices on the 1st of October, when there was the significant missile strike on Israel, oil price went up around about $10 per barrel. And over the last month, because there has not been the feared escalation, essentially all of that $10 has now gone back out of the market, and that's the price drop that you've just been describing. So we're back in a position where price is more being determined by the fundamentals, by the oversupply, rather than by the geopolitical tension.
OK, so let's talk about the disparity then between companies, because this is interesting, isn't it? Because you've got Total Energies with a 3-year low in the third quarter, but then you've got Shell with higher than expected sales. So what's going on with these different companies?
Well, it all depends on exactly what their exposure is to the market, their particular, different types of business. You talked about Total Energy being impacted by low refining margins. So it depends on how much oil each of those companies produces, how much gas each of those companies produces, and their exposure to other parts of the oil business, such as refining.
Yeah, can oil then be an indicator of what's going on in economies around the world? So, for example, Europe, things are pretty tough in Europe. Is it usually used as a sign of what's going on economically?
Yes, it is maybe for the last 50 years. But there is no doubt that the energy transition is starting. And by energy transition, I mean reduced decarbonisation, reduced use of hydrocarbons to make energy. And so what we can see is an evidence that some economies are starting to de-link themselves particularly from oil in terms of the driving force behind their economic growth. We're seeing that particularly in China in 2024, where their economy is growing. Maybe not as fast as they would like, but at the moment their oil demand is really virtually unchanged from where it was last year.
Lovely. Spencer Welch, Vice President for Oil Markets at S&P Global. Thank you for explaining that so that we can understand it. Thank you.
Thank you.